Hello everybody, this is Jared Passy and I want to welcome you to our Forex Fundamentals video section. This is a training that will be covering the foundational skills and knowledge for the Forex currency market. And we're going to move right into this and see what we can figure out here. First of all, we're going to talk about how this training is organized. The first section is going to be called How to Know Your Pairs. We're going to talk about major pairs, minor and exotic pairs, so you can look at what you want to trade and what relevance it has in the market. We're also going to talk about base and quoted, which is the types of countries or currencies that we have in the pairs. We'll talk about parallel and inverse pairs in the first video segment. In the second video section, we're going to talk about placing trades. We're going to look at reading a Forex quote and how to determine what the market's doing from that. We're going to talk about spread and leverage and margin, and we're going to talk about some entry and exit orders. In the third section, we're going to go into reading the charts. We're going to look at different chart types. We're going to talk about candlesticks for a little bit, the most commonly used type of chart for the average traders. We're going to talk about chart patterns and give some examples of those and how they're used in trading. And we're going to talk about certain price barriers for price action traders, things they use to determine where markets may shift direction. And we're also going to talk about some trading styles and strategies. We're going to talk about traders and faders and what that means and how to figure out what type you want to be or what type you are. We're going to talk about the different parts of a trading strategy, and we're going to give you an example of a strategy. So let's move right into our currency pairs to trade. First off, we've got our major pairs. The major pairs control most of the currency market. Out of these 6 pairs, most of the market is traded, the majority. So when we're looking at, $2 to $3 trillion a day in currency fluctuate in movement volume, these are where it's at. There are some other pairs we'll talk about, but these are where the most liquidity is in your trades, which is good, and the most volatility typically on a regular basis. So you notice that the US dollar is a piece of all of the 6 major pairs. We've got the euro, the Great British pound, the Australian dollar, the Swiss franc, the Japanese yen, and the Canadian dollar, all against the US dollar in one form or another. We also have our minors and our cross pairs. A couple of minor pairs are the euro and the yen, which is a pretty good one, and the pound yen, which is a more volatile, more active yen pair. And then we have several more cross pairs, and we also have some exotic currencies. There are hundreds. You can match up almost any 2 currencies out there to create an exotic pair. The Brazilian real, Mexican peso, etc. Those are more exotic. Less traded because less volatility and less liquidity in some of these exotic pairs. So let's move on here and figure out how pairs are explained. Pairs are separated into what's called 2 parts. We have the base and the quoted sections of a pair. The country listed first in the pair is the base pair. And one thing we need to know is that the base pair and the quoted pair never switches back and forth. So if it's the euro US dollar, it's always referred to as the euro US dollar and never the US dollar euro. Okay, so they're all set in stone. They stay that way. It's always the euro US dollar. That way people don't get mixed up. So in the euro US dollar, the euro is the base currency. Whichever one's on the left is the base pair, and the quoted is on the right. And what that means is that the price on the chart, okay, when you're looking at a chart, the price on the chart is how many of the quoted, how many US dollars, quoted currency it takes to buy 1 unit or dollar of the base currency. So it takes X number of US dollar to buy 1 euro. And whatever that chart reads is how many US dollar it takes to buy 1 euro. Okay, so here's an example. The euro US dollar, if your chart reads 1.5704, then that means it takes $1.57 to buy 1 euro. Okay, we'll let that sink in a second. It takes $1.57 to buy 1 euro if your chart reads 1.5704. All right, so the base pair is represented by the top of the chart. So if you're looking at a currency chart and your trade is climbing and you're on the US dollar, euro US dollar, and the chart is climbing, then the base pair, whichever one's on the left, the euro, means that the currency is climbing in favor of the euro. The euro is getting stronger than the US dollar. And that's what that means. All right, if it's dropping, then the US dollar is gaining in value against the euro. So that's how you read a chart. If the thing's climbing, whichever one's on the left is gaining in value, or if you think the US dollar is going to gain in value because of some news or something, then you should expect it to go down the chart. And that's how you'll capture your pips and make some money on that. Let's talk about some different types of pairs. Okay, we have what are called parallel and inverse pairs. Parallel means they're going along together. Inverse means they're opposites or mirror images almost. And so when we're looking at what's driving the market, we look at correlation between other pairs. And I just want to touch on this because it's kind of a little bit more advanced. But the euro US dollar, because the US dollar is on the right side, is the quoted pair of both of these pairs right here. The euro US dollar and the pound US dollar are parallel pairs. It looks like they are pretty much carbon copies of each other. They're the same thing. We've got starting out low, we climb up, we level off, we get a little spike, and then we drop off. Same thing here, level off, a little spike, drop off. They're not exact because there's different factors in there that are moving the British pound around a little differently than the euro, but they're pretty close. And so on the flip side, when you move the euro to the left, which isn't you moving it, you're just picking a pair, that the US dollar is the base pair, so the US Swiss franc is an inverse pair to both the euro US and the pound US. They're mirror images. So if we had a mirror right here, you could tell that this is dropping while this is climbing. We're both leveling off. This is spiking up, this is spiking down. And then this one's climbing while this one's dropping. They're inverse. They're like a mirror image. And sometimes you can see one of these pairs moves a little bit before the other one, and you can use that as an opportunity to place a trade and capture some pips because you have inverse pairs that are one country can actually make the move a little bit before another country, and it might give you an opportunity or a clue, an added clue as when to get into that. All right, so that's basically the pairs section of our video. Be sure to watch the next video section in the series on what is involved in placing trades. And good luck with that, and we'll see you on the next one.